So you can see here, the pullback leg gave us a change in market character here. Broke structure, but then price again pushed to the upside to cut the swing high. And then we have a change in character that aligns to the major market structure. So what you're going to be anticipating is to see the return of price to the downside to come mitigate this other block zone. And then you see price push to the upside. So now you can see now we have price come mitigate the zone. And then you see price push to the upside. And you can see that this is a lower time frame. So you see this is the 4-hour change in market character. So now what you're going to see is within the expansive leg move, you can see within the 30-minute time frame, which is a lower time frame, you can see we have price giving us bullish market structure. So you see we have this expansive move, the pullback, the expansive move, the pullback, the expansive move. Now what you're going to see is that price pull back to the downside, and then here we have what? A change in market character to the downside. So you can possibly misinterpret this and then think now that the market is now bearish in the case where you do not establish the major market structure from a higher time frame.
Hello guys, welcome to the Nexoel Trading Hub YouTube channel. In this video, we are going to be looking at major market structure and minor market structure identification for high probable technical analysis. You must understand that the market is fractal in nature. Structure is in all time frames, and the ability to rightly identify and actually differentiate major market structure from the minor market structure is very essential in carrying out any technical price analysis. The higher the time frame, there you define your major market structure, and the lower the time frame, there you define your minor market structure. So this means that major market structure is identified from your higher time frame, and the minor market structure is actually identified from your lower time frame. So guys, let's head to the chart so that you can actually understand how to identify the major market structure and also the minor market structure. Now you can see here from the charts here, we actually have a bullish market condition where you can see we have the market giving us the expansive move to the upside, and then here we have the pullback. Price gave us the expansive move and then took out the swing high. So you see we have a break of structure actually at this particular point. And then you can see we have the retracement of price to the downside, and then we have price pushed again to break this previous swing high, and then we have a break in market structure. So you can see we are having a bullish market condition from this particular chart example. But then you must understand that the market doesn't actually move in this particular straight term. Market actually creates waves. So you can see this is actually how you can see price movement in the real-time chart. You would see that price would give you the impulsive move. And within the impulsive move, when you drop to a lower time frame, you're actually going to be seeing a bullish market condition. And then now you can see that the retracement leg in the major time frame. Now you would see the retracement leg within a lower time frame is going to be giving us a bearish market condition. Just the way you can see from the spread, price is breaking the low points. Price is breaking the low points, giving us a bearish market structure. So you can see that we have the major directional bias to be bullish, but then you can see that within the major directional bias, the retracement leg of the major directional bias is actually going to give us a bearish market condition when we drop to a lower time frame. Just the way also when we drop to a lower time frame, what we are going to be seeing within this leg is a bullish move. And then the retracement gives us the bearish market condition. When we drop to a lower time frame, you're going to see this expansion is going to be giving us a bullish market condition. The retracement drops to give us a bearish market condition. We have the expansion giving us the bullish market condition. So this is why we actually say that price is fractal. The market is fractal in nature. You would find structure in a higher time frame and at the same time also find structure in the lower time frame. So you can see that the major directional bias is what actually bullish. But then when you drop to a lower time frame, you're going to be seeing within the expansive move, you're going to be seeing the bullish move. And then within the corrective move, you're going to be seeing a bearish market condition, just the way you can see here. Now and then price pushed to the upside, and then you can see we have a change in market character. So this is the condition from the higher time frame. This is the condition within the lower time frame. Now you see we have a change in market character. Now the movement of price have realigned itself to
the direction of the major market buyers. Now we have a change in market character within the lower time frame. We're waiting for the pullback to retest a sponsorship candle, and then we have price realigning itself to the major directional bias, which is actually bullish. Because you can see from the lower time frame, you're going to find this bearish leg. If you're not actually convinced about your directional bias, or you've not established your directional bias from the higher time frame, you have the possibility to actually think that the condition of the market have actually changed to a bearish condition. But when you already have your established major directional bias from your higher time frame, you won't really consider this bearish movement within the lower time frame as a change in the directional bias. But you're just going to regard it as a pullback to retest a higher time frame demand zone and then price realign to a bullish market condition. So we're going to look at a real-time chart example so that you can actually understand how to identify, how to mark out a major market structure and the minor market structure. So guys, let's head to the real-time chart example. So guys, before we head to the real-time chart example, please, if you're new to this YouTube channel, kindly please like, share, and subscribe to our YouTube channel so that you can stay updated when a new release comes and is made available in the YouTube channel. So guys, let's head to the real-time chart example. Now you can see here, we are actually in the daily time frame. You can see we have the market giving us a bearish structure, but then you can now see we have a reversal, and then we are now in a bullish market condition. What you can see is we have a change in market character. Price broke through the recent lower high point that printed this lower low point. So now we can see we have a change in market character. Now you can see we have the pullback, and now you see we have the expansive move that broke the structure. Now you can see we have the corrective move and then the expansive move that broke the structure. So what you're going to see from the daily time frame is that we actually have here a bullish market condition. But then when you drop to the lower time frame, you're going to see that within this expansive move, you're going to be having a bullish market condition. And then when it comes to the corrective move, you're going to be having bearish market condition. So you want to trade the lower time frame in alignment to the directional bias of the major time frame, which is actually bullish. So in the case where from this corrective leg move in the lower time frame, you're going to be seeing a bearish market structure. That doesn't mean that the condition of the market is now bearish. In the instance that now price pushed to the downside and then breaks this low point, then that is when you can now say actually it is now a bearish condition again. But now you see we have a change in market character. So what we are expecting is the pullback to a key level, to a sponsorship candle, and then we see the expansive move. So now let's drop to the lower time frame so that you can see the nature of price within this major directional bias, which is actually bullish. Now you can see this is actually our 3-hour time frame. So you can see we have the daily structure, which is actually bullish. So you can see the daily structure. Now you can see that within the daily structure, the daily directional bias, which is actually our major market structure because daily time frame is higher than the 3-hour time frame. Now you can see within the 3-hour time frame, we are also having a structure formed within the expansive leg move and the corrective leg move of the daily time frame. So you can see that the structure within the 3-hour time frame becomes our minor structure. The daily structure becomes our major structure. So we are going to be trading off from the daily structure. So from the 3-hour time frame, what we're looking at is to take entry from the 3-hour time frame in alignment to the major structure in the daily time frame. So when we see a bearish condition in the 3-hour time frame, that doesn't mean the directional bias of the market is bearish, because we already know that the major market structure from the daily time frame is actually bullish. So now you can see in the expansive leg move here, you can see we are having a bullish market condition. So you can see price push to the upside, we have the retracement, price swept to this high point, we have a breaking structure. So you can see within the expansive leg move, we have a bullish market condition. So you can see this is where we have the daily time frame change in market character. But within the 3-hour time frame, you can see that this swing high points here sponsored the move to the downside that broke this particular low points here. So what now we're going to see is that this is where we have our change in market character, because you can see that this swing high sponsored this move. We have break in structure, price pullback, and then price drop to the downside. So the moment price swept through this swing high points, we have a change in market character already. So now you can see, but in the daily time frame, this is where we have the change in market character. So what you're going to understand is that the lower time frame gives you an early consideration to take an entry to execute a trade setup. So now you can see in the corrective leg move, what you can see is that now we have what? The bearish market condition. Now price broke the structure, but then price return took out this swing low points. So you can see you must understand how to establish your major directional bias, and then how to also establish the minor directional bias, the minor market structure, how to trade off the minor market structure in alignment to the major market structure. So you can see here, the pullback leg gives us a change in market character here. Broke structure, but then price again pushed to the upside to cut the swing high, and then we have a change in character that aligns to the major market structure. So what you're going to be anticipating is to see the return of price to the downside to come mitigate this other block zone, and then you see price push to the upside. So now you can see now we have price come mitigate the zone, and then you see price push to the upside. Now price aligns to the major market structure, and then now you can see within the expansive move, you're still having the bullish market structure. So you can see in the case where you miss entry from this particular pullback that returned, since you already know that now within the lower time frame, the market has realigned itself to the major market structure in the daily time frame, which is bullish. So you'll be anticipating to receive the pullback to enable you take an entry, and then you continue with price, because now price has aligned with the major market structure. So now you can see price return, price push to the upside, took out this high point. Now you see price return, retested the high point, and then you see price push further to the upside. So this is how you must learn to identify the major market structure from the minor market structure. Let's look at another chart example so that you can also have a clear understanding on major market structure identification and then the minor structure market identification. In the next video that I'm going to release, we're going to be looking at the practical application of this knowledge in the real-time charts. So we're going to have a replay of charts to see how this plays out. So guys, let's head to the next chart example. So guys, now let's look at this particular chart example. You can see this is the Aussie dollar. This is the 4-hour time frame. You can see we have actually a bullish market condition. You can see the market has been bearish. So you can see price broke the structure, price push, and then you see we have a breakout structure here, and then price push to the outside, took out this high point that printed this low point. Now you can see we have a change in market character. Now you can see the pullback, and then we have price push to the upside. Price retrace, took out the inducement. We have this valid higher low points. Price push, return, took out the inducement, a valid higher low points. Price push to the upside. Now you can see in this particular case, price return to the downside, took out the inducement here, and then price push to the upside. But then you can see we do not have a pullback created here before the sweep of this high point. So our inducement moves from this particular inducement to this particular level. So now you see price now return and then give us our valid higher low points. Price push further to the upside, and then we have a break-in structure. Price return, took out the inducement, and then we have the push of price to the upside. So you can see we have a valid bullish market condition here. So we are taking the 4-hour time frame as our higher time frame. So we're going to drop now to the lower time frame to see the structure within the lower time frame. Because what you can see here, we have the expansive move, the correction, the expansive, the correction, the expansive, the correction,
the expansive move. This is the entire expansive move. And then we have the correction. So now here from the higher time frame, which we're establishing the major market structure, one will consider this as a change in market character. But actually, this is actually a sweep of what liquidity. Because you can see actually price to cut these inducements, this becomes like a deeper pullback. Since we do not have any recent pullback created here before the break of the structure or after the break of the structure, what we can see is just price return and then took out this low point. So this is our deeper pullback, our valid pullback. This is the inducement. So this is a single leg move from this swing low to this particular swing high. So guys, let's drop to the lower time frame. Let's use the 30 minutes as our lower time frame. Now you can see that this is our lower time frame. So you see, this is the 4-hour change in market character. So now what you're going to see is within the expansive leg move, you can see within the 30-minute time frame, which is the lower time frame, you can see we have price giving us bullish market structure. So you see we have this expansive move, the pullback, the expansive move, the pullback, the expansive move. Now what you're going to see is that price pull back to the downside, and then here we have a change in market character to the downside. So you can possibly misinterpret this and then think now that the market is now bearish. In the case where you have not established the major market structure from a higher time frame. So that you can see price push down, you have a change in market character, you have the pullback, price fell. So what happened is after the change of market character from the higher time frame, which is our 4-hour time frame, price needed to retrace before giving us an expansive move. So you can see the retracement leg gave us a bearish market condition. So if possibly you're just looking at price from this particular time frame, the 30-minute time frame, you might misinterpret the pullback leg as a reversal in market condition. So now you can see price pullback and then give us an expansive move to the upside. So you can see this is actually even a sharp move. Price did not really form bullish structure. Price gave a very strong impulsive move to the upside. So now what you can see is price created a new high points, and then you can see price pullback and then swept this low points. You could possibly say now you have a reversal in price. No, it's not a reversal in price. It is the pullback leg move in the lower time frame creating a bearish market condition. So you can see we had the pullback and then price resumed in confluence to the 4-hour time frame bullish major market structure. So you can see now price giving us price push to the upside, give us a change in market character, because you can see the pullback giving us the bearish market condition. And then now price pull to the downside, swept this low point. Now price push to the upside. We have a reversal because price gave us a change in market character here. Now you can see the pullback and then price resumed into the bullish market condition, which is established within the 4-hour time frame. Now you can also see now we now have a bullish market condition in the expansive leg move of the 4-hour time frame. Now you can see the corrective move also giving us now here a bearish market structure, because you can see price push to the downside, took out this low points, and then we have a change in market character. We have the pullback, price push to the downside, we have a breaking structure. We have price push to the upside, drop to the downside, we have a breaking market structure. But now you can see that now price push to the upside, took out this high points. So we have a change in character. So we'll be looking for entry levels to trade in the direction of the higher time frame structure, which is actually the 4-hour time frame structure, which is our major market structure. So basing trade entry within the 30-minute structure would actually make you consider this as a reversal, when actually this is just a pullback leg. So let's go back to the 4-hour time frame so that you can see something properly. Now you can see from the 4-hour time frame. Now what you're going to see is that this is the inducement resting here. This is the inducement resting here. So where is the zone below the inducement? Because you can see every form of sponsorship candle have actually been mitigated. So this is what is left unmitigated, this particular level here. So you can see this is what price returned to mitigate. before pushing to the upside. So let's go back to the 30 minutes so that you can see that level. So now you can see it from the 30-minute time frame. Now, if you're not certain of the major market structure, you're going to make the mistake of assuming that this now has changed to a bearish market condition, because you can see you have the push to the downside that gave you a change in market character. Actually, what price is actually returning to is to mitigate the major market structure unmitigated sponsorship zone. And that is what you can see happen here. Price return mitigated the zone. And then you can see we have this expansive move to the upside. So this is how you want to be looking at major market structure. The higher time frame defines your major market structure. The lower time frame defines your minor market structure. Let's go to the 4-hour time frame again. Now you can see for this instance here that price push to the upside. This is the inducement. Price return swept the inducement, and then you see we have the push to the upside. Now you can see again in this particular instance, you can see we have price give us the expansive move. Price return swept the inducement. Yeah. What you can see is we have this fair value gap below the inducement level. You get it? So we have this fair value gap below the inducement level. So now what price did was to return to fill up the imbalance, the fair value gap, and then we have what? The impulsive move to the upside. So let's drop to the 30-minute time frame to actually look at this zone. Because you can see here, you just have a pullback leg. You don't have a bearish structure being formed here. So let's drop to 30-minute time frame to see if we're going to see a bearish structure formed within this pullback leg. So now you can see this is the 30-minute time frame. What can you see here is that actually you can see price gave us what? Bearish structure. Because what you can see is you can see that price took out this low point here. Give us a change in market character. And then you can see price gave us this change in market character here. And then price gave us a break in market structure here. And then price gave us a break in market structure here. You can also see again, price gave us a break in market structure also here. So there is a possibility you can consider this as a reversal when you don't have the major market structure in mind. You can see within the 4-hour time frame, you just have a single leg move here. But you can see in the lower time frame, you are having structure. So this is a minor structure within a major structure, which is actually bullish. Let's check that in the 4-hour time frame. So you can see in the 4-hour time frame, it is just a single move, a single pullback leg move. But you can see in the lower time frame, we were having and seeing a bearish market condition. So this is how you must learn to differentiate the major market structure from the minor market structure. When you use the 1-hour time frame to establish your major market structure, meaning the 5-minute time frame is the time frame you consider as your minor market structure, or the 15-minute time frame. Any time frame lower than the 1-hour time frame gives you your minor structure. So you want to trade the minor structure in confluence with the higher time frame structure, which is your 1-hour time frame structure, which establishes your major market structure. So guys, this is what I just want to show you guys on how to identify your major market structure and then your minor market structure. If you've gained value from this video, please guys, like and share. And if you're new to the YouTube channel, kindly subscribe to our YouTube channel. Cheers guys, and God bless you.